Friends, I am Ranjan Sahu. I am passionate in economics, finance. I am a qualified research analyst. So, today we'll discuss about IDFC Fast Bank, whether it's worth investing or not. What is the future of IDFC Fast Bank? Before that, a disclaimer: this is only for analytical purpose. There is no way to tell you about or a kind of recommendation of this stock or anything. This is only for analytical purpose. Let's go into to unlock this thing. So I have made into 5 steps. So first step is why banking stocks are such important. Why what banking is going to play a major role in India. And second is evolution of IDFC Fast Bank. Third is we'll try to understand IDFC Fast Bank's marketing and branding strategy recently, even the product development strategy. Fourth is we'll try to understand the quantitative aspect of the IDFC Fast Bank, particularly the kind of what is the net interest margin. They will try to analyze their CASA accounts, cost of funds, their income, etc. And finally, we'll try to summarize. So first thing is why banking is important. This is very very crucial. So because if you look at Indian banking, banking India, despite a $3 trillion economy and going to reach something like $5 trillion in next 2 3 years or maybe 5 years, we are not seeing a big bank which is in top 100. There is no. That means there is a huge potential for banking in India. And why if you look at organized sectors are growing with labor reforms, so access to funding, access to credit will become easy. People will obviously open their accounts in the bank, so they will create the history. So more number of people will file the income tax. So as more and people will access to the bank, so they will have a kind of credit history they will create. So we now launching a company. More people are going to buy automobiles, two wheelers, cars. So obviously it requires some kind of financing mechanism. you know and as India is growing, so one aspect is more and more people will access to the banking sector. So a lot of entrepreneurs are taking bath. So more people are using credit cards. All these actually, if you look at Jandan accounts, 33 crore mainly women are part of self-help groups. And many, if you look at pay later and various transactions of e-commerce are happening, obviously require a bank account. So that means if you look at, there will be explosion of kind of banking sectors in terms of credit, in terms of penetration, in terms of credit access, in terms of fintech innovations. Lot of innovative products will come, a lot of competition, new bank license will be issued and all. So there is definitely a very very huge potential for banks. And right now probably the banking assets around something like 100 lakh crore. So I believe it is going to maybe 5 times or 10 times by next 10 years. So it is going to be this decade might be a banking decade. So regarding IDFC Fast Bank, as I said, we'll try to understand. So IDFC Fast Bank is created with the merger of IDFC Bank and Capital Fast. So let's try to understand the IDFC Bank. IDFC Bank, it seems, was set up in 1997 to finance infrastructure, and they have successfully expanded to asset management, institutional banking, infrastructure, debt fund, mainly into wholesale banking side. And they got a license, and they try to segregate IDFC Bank as separate, from the IDFC Limited, and they actually divested their infrastructure and liabilities, infrastructure assets and liabilities. And parallelly, there was another development going on by Mr. Baidanathan, who is an outstanding human being, and is somebody outstanding leader, I would say. Somebody who has built the ICICI Bank's retail banking in the early 2000 to 2009. So so that means if you look at retail banking of India itself started around the era of 2000, because before that it was very difficult to get loans for the retail purpose, personal loan, etc. And if you look at so he has the main guy in expanding the ICICI's retail branches, retail business, assets growth, etc. So, and he was the man behind, lot of ICICI bank, lot of accounts opening, the CASA side. So he understands what is the meaning of retail banks and how the retail banks can, retail assets, can grow. So if you look at the history, he left the company for an entrepreneur journey, and during 2010 to 12 he acquired a stake in NBFC, and he's tried to build a prototype for such financing like 12,000, 30,000, and he built a loan book of 770 crore within a year and presented the proof of concept to many global private equity players for a leveraged management buyout. And finally it happened. And finally it happened. So IDFC First Bank was founded. Ultimately, IDFC First, this is the story of IDFC Bank and Capital First. And since Capital First was an NBFC, so obviously it can launch a commercial bank. So the leadership of Vaidyanathan in the retail sides impressed the IDFC Bank, which is a wholesale bank. So they merged together to form IDFC First Bank. It's outstanding. And if you look at the bank stopped growing the loan book to strengthen the liabilities franchising. So they're too much concentrated on the wholesale bank. So their CASA ratio was 8.75 7% only, but today it is 48%. So you can imagine, the CASA means current account, 7 accounts. So that means I'll explain in detail why CASA is important. But you just remember, CASA means the cost of funds will be less for the bank. It is almost, current account is 0% interest. You will get saving accounts majorly. If it is not a term deposits, it is also very very less. So if you look at some of the marketing branding of product, I'll just discuss before I move to. So their vision is very clear actually. They want a quality consumer fast bank, and they have hired Amitabh Bachchan as the brand ambassador. And if you look at their focus is on cricket, they had Harsha Bhogle for brand building, connecting with people, the hearts. And if you look at, they are doing a lot of innovations. I'll talk about the finance later. Their product innovation, credit cards with dynamic interest rates rather than 3.5% flat that others are charging. He's trying to make it more dynamic so that people, more and more people who can also have credit card with lower interest rate charge. 3.5%, obviously he's trying to exploit that opportunity, that gaps. And if you look at the fourth part, retail partner lending strategy, that means anybody, any of their customers, anybody can actually recommend any person who wants certain loans, and if he gets approved, so he will get some this thing. This way actually it is a kind of network actually. You will get a lot of people. It's a kind of incentives. Obviously that instead of giving to the partners, the third party agents and all those who bring a lot of bad loans, so giving to their own IDFC Fast Bank customer to refer somebody, probably it will generate less NPA, high possibilities there, and you will get a this thing. So we'll go to the quantity part actually. So what is the quantity part? If you look at certain statistics is very very clear actually. They wanted to be a retail bank, not the wholesale bank. Why retail bank is important? The reason is retail bank has the lowest risk because assets are diversified into lot of people, and also they can charge very high interest rates to 18% to 20% or more than that also to a retail guy. Compared to wholesale, risk is highly concentrated. Somebody is taking crores of loans like 700 crore, 1000 crore, 500 crore, but retail guys will take in few lakhs. And they, since the corporate guys, the wholesale guys, the infrastructure guys, they have greater bargaining power since they are taking so many loans. So obviously you cannot have higher margin, and also you are carrying huge amount of risk. So if you look at some of the statistics, retail assets, they have grown from 7,000 crore around 2018 to 66,000 crore in retail assets. If you look at their guidance is actually 1 lakh crore. So obviously they are on track. If you look at retail asset as a percent of total assets, retail plus wholesale, it is 60%. It's outstanding. So they have a target of 70% or more they can go. So by 2024, obviously it is achievable because they're in 2020, 21 around. If you look at wholesale funded assets, they're trying to deleverage that. They don't want to grow the books, and minimize the risk. So if you look at their retail, wholesale assets is 34,000, and if you look at in 11,000 crore infrastructure is a high risk business actually, and obviously they want to minimize that. Okay, so if you look at their GNPA percentage is around 1.33 percentage. If you look at NNPA, which is post provision, it is 0.3%. That means they are they're very very less non-performing assets are there, and they're almost, if you look at their provision is able to cover almost 75% of their NPAs, which is outstanding in nature there. So if you look at he is talking about some of the sides on the liability side, that was asset side. So CASA as a percentage of deposits was only 11%. Today it is close to 50%, which is already achieved, not on track. So if you look at CASA in the retail CASA, retail term deposits, so they already grown it. So number of branches there on 576 is in track. They're growing actually. They're growing. And if you look at customer deposits less than 5 crore is 78%. That means 80%, which is achieved. But we should not have big deposits. That will create some kind of risk. Actually, sudden withdrawal of the deposits will definitely create risk. So top 20 depositor concentration has come down to 10% from 42%, which is an outstanding actually. And they're planning to make it 5%, which is very good, because depositor concentration, as I said, will create unnecessary risk. Then let's go to the bank actually. If you look at net interest margin is actually, they're growing continuously. There, if you look at the trend, is really positive, and they will target it to 5% and they are continuously growing quarter over quarter and year over year. Cost to income ratio, obviously, it is very high, little bit, so they are targeting 55%, and probably they are telling it is on track. Let's see. I am little doubtful. But if you look at return on assets, obviously as 0.32%, the majority, mainly some of the problems that happened in 2018 and also some of the losses they booked. So with their focus on the retail strategy, so obviously retail has higher margins, lesser risk is diversified, they can easily achieve. So the companies on the growth stage, we should not be worried about whether return on assets is little less, because the growing business actually takes some pain to reach there. But if you look at return on equity, no doubt 2.92% now. But obviously we want 15% our return on equity to our shareholders, but they are on track. And probably if they're trying to grow their loan book and assets, they're trying to minimize the cost of funds, they have to maximize the margin, they're on track. So if you look at the same thing, it is given. So given little bit on glance side. If you look at asset side, so the retail book has increased 24%. Can you imagine the retail book, which is less risk book, not the wholesale book, and they are almost 66,000 crore despite COVID. It's an outstanding growth. Now retail constitutes 65% of the loaned fund assets. So that means their target is 70%. So they're already on the 65%. And so they're trying to deleverage the wholesale funded books. They're trying to minimize the risk and minimize the margin, so that maximize the margin. And infrastructure loans, they're trying to move away actually. So they don't want to go to infrastructure. Of course, infrastructure is definitely a risk, but yeah, government is having a separate plan for infrastructure bank. Let's ignore that. So if you look at the liabilities part, if you look at the liability base, CASA deposits grow from 40,000 crore, to 40,000 crore. So which is an outstanding, because the cost of funds are in current account, it's zero. And in saving accounts, unless it is a term deposit, saving accounts is very, very less also, maybe 3-4% or less than that. And that helps. That is their plan to fund the assets from the CASA. And they're trying, if you look at HDFC Bank, ICC Bank, they are completely CASA driven. Okay, let's go to the some of the strong core earnings part. If you look at NII growth, net interest is 14% outstanding, I would say. And NIM improvement, obviously, improved to 4.65%. Almost, if you look at 0.75 percentage points, they're improved. I mean, I believe 0.8 percentage points in the margin in a matter of years. So, in probably in another year, they might reach, 5.5%, which is an outstanding net interest margin if we are able to do it in 5.5%. So if you look at their, total income grew to 2,600, 6 crore from 2,100, total income excluding trading gains and all this thing. So okay, so what about this? If you look at the profit after tax is reported 130 crore as compared to a loss of 1639 crore. So all these provisions they have booked correctly with cash and provisioning they have maintained. They have taken some 595 crore provisions as compared to last time because of this, Reliance Telecom, probably telecom exposure. They've got a badly hit. And if you look at IDFC First Bank, banks grow, all this NPA part I already this is very very critical for a bank. The NPA should be down, and their net NPA 0.3%, and they are able to do provision coverage is 75%, which is an outstanding. Okay, so let's go to the, if you look at this particular chart, you will find, you know 90% of their assets one wholesale in 2018. You look at now it's 60, probably 60% or 65% of the assets in retail. So which is an outstanding, achievement, I would say, within a short period of time. Looking at this, I am very very optimistic about this company, and no doubt. And if you look summarize everything, if you look at on the principle side, not only the quantitative side. So I believe, strong retail focus, which is an outstanding because higher margin, lesser risk. If you look at retail assets now 65%, retail liabilities now 50% of the cash, which is outstanding. If you look at secular trend of growth in net interest income, so from, now it's 4.65%, outstanding net interest income. If they reach 5.5% is outstanding, simply, compared to other banks like HDFC and ICICI and all. If you look at the NPA part, they are able to do very good collections. So their NPA has reduced. I think, GNPA something 1.33%. If you look at net NPA after covering provisions, and it's only 0.33%. The slippages are very very less. If you look at secular trend of decline to cost to income ratio, which is, cost to incomes, they started with 90. I think it's probably now 78 something, and they are targeting to 55, which is an outstanding. So obviously if they will target, they will have, so they are trying to save in multiple fronts. They are trying to increase their margin, net interest income, and they are decreasing the cost. So that means they're trying to create a bigger gap between what is called the income and the cost. So that will become your bottom line, that will be delivered to the shareholders. It will be an outstanding shareholder return. And if you look at, Vaidyanathan is an, I think, BITS Mesra planning graduates, an outstanding leadership. He has proven it in the branch expansion of the ICICI Bank, the way they opened the, the, accounts, and the way they grow their banks to the retail funding, etc. It's an outstanding achievement. And then, it's led by a fast and obviously, fast and entrepreneur are hardworking, committed compared to the second generation, where actually you get it whatever you have with the first generation. So that makes a, great entrepreneur, those who understand the ground realities, the complexities. If you look at the product innovation, generally in banking sector, product innovations are less. They generally, all try to play in the same these things. So we'll have product innovation on the dynamic interest rates for the credit card might be mega, bumper. Probably people will start going to the IDFC First credit cards because of their, lesser interest cost, instead of 3.5% per month, probably it will be far less. And finally, the brand building with Amitabh Bachchan and Harsha Bhogle is going to deliver, kind of, outstanding impression and outstanding brand recall. So overall, I would say it's an outstanding bank, and probably its future is high. And if you look at, there are various things that I discussed about all these parameters why banking is. I explained correctly why the banking sector is going to take, because banking penetration and is very less with banking and fintech revolutions. Most of the people, those who are taking money lending from the money lenders, they will try to access the banking system and they will try to create relationship by taking loans. And many of the personal consumer loans will happen on, buying, their automobiles, and buying houses, buying various with e-commerce and all, buying even, normal, mobile phones also, pay later and various other things, and is definitely help the banking sector. And IDFC Fast Bank evolved, as I said, the way it evolved, and the Baidyanath's leadership in the retail banking in ICC Bank. And obviously, if they look at some productive marketing and product innovation, is definitely outstanding. And finally, I have talked about the quantitative analysis. The cost of funds is going down because of the CASA ratio, and cost of to income ratio is also going down. Gradually, they are trying to, make prudent decisions about the operating cost. And if you look at the on the margin side, that is growing gradually. So the gap between the income and the cost is actually, creating larger and larger gaps, which will help, the company to achieve outstanding, return to the shareholders. Thank you very much.